Welcome to the CU 2.0 podcast greatest hits number 25. This show dates back to August 2021 and it aired as episode 162. The guest, Peter Rice, now CEO of Hanscom Federal Credit Union, and then he was Chief Banking Officer at Workers Credit Union. He came on the show to talk about a new dazzling branch concept, robots. You will hear how Rice's mind works in the show. And a few days after the posting of this greatest hit, a new episode with Rice will post where his mind roams among the hot topics in credit unions today. If Joyce's Dubliners is a prequel to Ulysses, this podcast from 2021 is a prequel to Wednesdays. Listen up. This is the CU 2.0 podcast with your host, Robert McGarvey. Big new ideas about credit unions. Big new ideas about credit unions. CU 2.0 podcast. Money woes. That sounds like the title of an old blues song, but ask Peter Rice, Chief Banking Officer at Workers Credit Union in Massachusetts. He will tell you it's not an oldie, but in fact it's today's lyric. He can prove it with a recent Central Mass survey. It found 65% of the residents said they were unsure, stressed, or extremely stressed about money. Ouch. That's a lot of financial anxiety. But, said Rice, it's exactly a place where a credit union could and should help. And in that way, it will also gain a competitive edge. In the process, Workers has introduced a new branch concept called Planet, which, get this, features an interactive hologram named Olivia and a short, perky robot named Pepper. I don't kid you. Olivia and Pepper. That's because the Workers' hope with this new branch is that it will be welcoming, inclusive, a little bit fun, but also will help inspire members to achieve their personal financial wellness. Wellness, of course, is what will cure financial anxiety. A stat that hit Rice like a brick is that most of us, even the seemingly well off, don't have $400 in ready cash to deal with financial emergencies. Yet this past 18 months have been a textbook illustration of how the unexpected and unimagined can become our reality. We need to be financially well to deal with these speed bumps in our life highway. And as the last 18 months have taught us, those bumps are coming. They're coming our way. The goal of the Planet Centers, Workers opens 3 and has plans for more, is to help members to feel empowered and also to get them more engaged with the credit union. And yeah, people do come into the branches to interact with Olivia, who is multilingual and very helpful. Also with Pepper, who is just plain cheery. Is this the future of the credit union branch? Is this how credit union can win the battle for the member? Expect to hear challenges to credit union orthodoxies in this podcast. Rice thinks into the future, and in this podcast, he tells his route to getting there. By the way, that accent you hear is not a rogue Boston lilt. It's from Rice's native Ireland. Listen up.
If I could maybe set this up for your listeners a little bit, coming from the outside, it gives me maybe a different perspective. And again, forgive me if I sound dreamy and ideological, but I feel very blessed to be here. It's been the honor of my life to come here and become a U.S. citizen. And I had a lot of catch-up work when I came here because I came here late in my 20s. And, a lot of experience, a lot of neighbors, family and friends had emigrated to America over the centuries, come back. And I just had this phenomenally positive image of what life was here. I knew it was going to be tough. I knew I was going to have to work hard and think. But just that kind of an opportunity is just unbelievable. I have to scratch myself every morning when I wake up. But when I arrived and we kind of went through the big meltdown, 07, 08, I first started to read articles from the American Psychological Association. And the number one cause of stress in America, and I've looked and read that same report every year since, it may surprise people or may not surprise people, was the number one cause of stress in America is money management every year. Personal health came out at about 24% of people were worried about their personal health. Just off the top of your head, Robert, I don't know, how many gyms would you guess there were in 2009?
I don't know.
About 29,000. And in 2019, that number had increased to 42,000. And what I'm trying to say is we have become really transactional in our business. We've been so focused on getting members to their money and access to money and lending very, very quickly. And we've been very successful at that. So the two utilities of a financial institution is, number one, to keep money safe, and number two, to move money safely. And we do that as well as any competitors. We do that as well as any big institution. But what we're trying to do here is, when you look at that number, 72 to 74% of respondents said that money was the biggest causer of stress. That's huge. And yet physical health was 24%, and the market has responded by building more gyms. And so there's this huge stigma and shame built around money in our society. And when you get deeper into the psychology behind it, and you ask people about change, they say that they could change their financial stress if they had more money. And that's huge. So if I were richer, I could solve this money problem. And so we've been tossing around this issue, for about 10 years. And it's not in financial services. You won't hear financial services companies talking about this opportunity at all. And in that sense, I think we've left behind members. We've been so focused on providing that transaction and service. And you're going to hear something controversial from me now. Is I think service is dead. I think it's been dead for a long time. I think it's a table stakes to be respectful. But I think it's dead. And I think we're now in an era, whether we realize it or not, of the value era. And what I mean by the value era is we have an unhealthy psychological relationship with money and how we spend it. When you read the national statistics outside of that stress, if you take, and I'm sure some audience members may say, well, what is this guy talking about? Well, let's talk a little bit less about stress and talk about actual statistics around people and their money. 60% of people don't have $400 saved for an emergency.
Right.
That's regardless of income. So that includes people who earn over $100,000 a year. And so what we're doing at Workers is, first of all, we're acknowledging, which is very important around anything that marginalizes people and makes them feel small. Acknowledging the issue is very important. So first and foremost, we're acknowledging that there is a lot of shame and stigma in our society around money. We believe that a lot of it is ingrained behaviors where people haven't received any coaching, guidance, or mentorship. And we think that our industry, by and large, hasn't responded to it. And some may say, yes, we have, and we've got financial education tools. Well, if you go onto any financial services website, you'll see a lot of blogs and a lot of financial information, but this isn't what corrects behavior or helps people with their behavior or helps them address value in their life. So I'm coming back to that value piece. So when we began to survey our members about their relationship with money, lo and behold, it matched exactly what we were seeing on the national level. That's here within central or north central Massachusetts. And when we began to talk to our members about this, we realized that what they really wanted to do when they spent money was seek value when they spent it. And a lot of members had become tied up in behaviors that weren't generating value for them anymore. So one of the biggest expenses was eating out. But when you were talking or when in conversations with members, they'd say, I can't remember the last meal I actually enjoyed. In other words, they'd formed a loop and that it just became a habit rather than a value experience of going out to eat with their family. And oftentimes they'd say, originally we'd go out, we'd have a great family meal. And then all of a sudden I was eating out 4 nights a week. And then all of a sudden I was eating by myself. And we found this kind of a common thread. And so we decided, what are we going to do about this? What are we going to be as an organization going forward and into the future? Because if you think about it, if you work at a credit union, there's a lot of talk right now about scale, the importance of scale going forward. Purpose is the most important thing we have. That is the heart of our industry. It's the reason why credit unions exist. A rational person would never form a credit union with the competition that's out there.
Also, all the hoops you have to go through to get an NCUA charter. If you can do it in 3 years, you're a superstar. You're
a rock star. And now credit unions with 100-year histories are contemplating the future. And what I say to folks is, if you're really contemplating your future, you have to focus on your purpose first. Scale is critical, don't get me wrong, but your purpose is the reason for your existence.
And in the history of credit unions were formed with a purpose.
Yes.
So you say take St. Mary's Bank, a bunch of French guys in New Hampshire
Yep.
felt excluded from the banks in the community. And they probably were excluded because their English was bad and they spoke French, for heaven's sakes. And so right in the formation of that credit union, you know why you're forming it. It's to serve us. And we're excluded people, that's to me where most credit unions get their start. Now credit unions want to compete with Chase for upper middle class customers. Fine, but that's not the DNA of a credit union.
No, it's not. And so the approach we're taking is to, when we say grow members, I'm not talking necessarily about the number of members, but I'm talking about connecting our members to value and financial wellness. Because financial wellness is a relative thing. And to actually help our members grow in order to achieve their other dreams, because money is that conduit. I keep on thinking back to the purpose for credit unions, which you stated, and workers is, I believe it's the fourth oldest credit union. I'm not sure on that. It's again founded by Finnish immigrants for the exact same reasons as St. Mary's Bank. And we wouldn't be too far away from Manchester. We're less than an hour's drive, so right. The purpose spread out to other industrial communities pretty quickly. And that's critical. That's why we get up every morning and we love the work that we do, not just to be there for members and serve members, but to actually add value. And I'll loop back to that example of gyms. When you're the member of a gym, if you don't use the gym, you're not going to get through value. There's an understanding, there's an implicit agreement when you become a member of something that you want to work at something, that there's something that needs to be improved. And I think that's the next great frontier for us. And maybe it's back to the future in a sense, Robert, and perhaps it is, but I really wanted to get back to, A, purpose, B, engagement. And when I look around at how much the world has changed for the positive, and I know it may not feel that way in many senses to people, but we're light years away from where we were 50 years ago. And we need to be light years away, further. But I think about my own childhood visits to the museum. And this is where I weave technology into the story. But I think about those visits and everything was in a glass case and everything was dead and stuffed. And there would have been a little card with the genus, all in Latin, and approximately when this animal lived. But you go to museums now and they're interactive. You can learn all about that animal, all about that dinosaur. You can touch it, feel it. Experiment, know all kinds of interesting facts about it. And museums created these great spaces to engage and to learn, whereas before it was purely an intellectual pursuit. And so I think that credit unions have become transactional and intellectual when they approach finances. But we haven't embraced the human emotion and human psychology behind money. And just what a big thing it is in people's lives, not just the amount, but how they use it and how they spend it and who's there to provide them a no judgment zone where they can engage. And so when we began to, go back to the future on this and we began to look at our new branch design, looking back, branch designs and layouts haven't changed in 150 years plus. You can Google it and see all about walls, barriers, security, and safety. But if you look at it, how can you engage people in a barrier area? And I still remember my first visits to a bank or a credit union. I felt like I was going to be asked to leave, quite honestly. I didn't feel like I belonged there. Maybe I don't. But these were all emotions that I couldn't forget. And certainly coming here to this country and looking for credit for the first time and realizing how important that was with or how it was going to be so important to my identity going forward, that I had good credit, blew me away. It just blew me away. I remember asking institutions at the time, how do I start my credit? How do I establish my credit? And it seemed to be a train passing by so fast I was never going to get on it. And therefore I wasn't going to be able to buy a house, and maybe, family was in the distant future, kids and family.
Also, you would have had trouble getting a credit card. And without a credit card, it's very hard to check into most hotels.
Yes, there you go. So, whole aspects of life, I couldn't live it for the first year and a half, 2 years. I couldn't go anywhere, to your point. I couldn't buy anything. I couldn't book anywhere. Couldn't rent a car. It was quite difficult. But I keep on thinking back as well to the word credit, or credit union, and I'm sure most of the listeners know that comes from the Latin credo, that translates as I believe, and to me that's hugely transformative. To say that I believe that tomorrow is going to be a brighter day, and that you will be able to repay this money to the group, to the team, to the members, and you'll be able to do better for yourself. Not just in this belief, of course. We know there's a lot of planning goes into it, but that's hugely transformative. And so, what I'm not saying here today that people are over levered. I just think what I'm noticing societally, and probably folks are as well, everybody's looking for more value with their time and what they do. And I think that's one big learning from the pandemic. And we're seeing that in the job market right now. This is the perfect example of why I believe the service economy is dead. And I had a very interesting conversation with a 15-year-old last week. Not a family member, but I was just intrigued in this young person's view on the world. And he had a choice, and his choice was to work at Burger King for more money, or work at Best Buy. And he chose Best Buy. And I said, why did you choose Best Buy? It's less money. He said, because I can hook people up. And I thought that was really, really interesting for me.
What did he mean by that?
Well, he meant that he could help people, right? I can be the man. I can be the guy. People can come in and ask me about, electronics or stereos, and I can hook them up.
Right. No, that makes sense. At Burger King, you just fill in. Here's your burger. Here's your fries. Goodbye.
Yeah. So. Yeah. And look at what's happening in the service industry right now. Everybody's struggling to find folks. And we can't, and there's a number of reasons behind it. Some would say it's government funds, and that's certainly a factor. But I don't think it's the biggest factor. I think that, like all pandemics, or the aftermath, and coming from Europe, we would have learned all about the plague and the first industrial revolution after the plague, when there was no labor force. It was the first reckoning in Europe, and the first weakening of the feudal system, and better wages and conditions for the serfs or servants. That was the first one. But I believe we're going through that fourth wave right now, or just about to, where we're going to have to start to focus on purpose and value. So beyond getting money from A to B, how does our checking accounts transform a life or add value to a member's life? And certainly treating members with respect when they come into a branch or engage with any of us. Sure, that's a huge thing. I'm not trying to minimize that, but how are you going to help transform that member's life? And this is where, being the differentiator comes in, and feeling that credit union difference is going to become so critical. It's going to be the main front in the next couple of years, I reckon.
I also think about a massive change in my lifetime, where historically, if you go back 50 years, when a person had a relationship with a bank or a credit union, it tended to be monogamous. In other words, I got my mortgage, I got my car loan, I got my credit card, everything from the same institution. Now things are chunked out. I have a car loan from place A, a mortgage from place B. Then I have a credit union that I'm very fond of. They're a good credit union. But I never even thought of using them for a car loan, strangely enough, even though I've worked in this business for some years. It's like, it was an easier deal to do it the other way. So I think that a credit union has to compete on every transactional level too, not just get a member. Okay, fine. What does that mean? You have someone who put $5 in a share draft account. Whoop-de-doo. It doesn't mean a thing to me.
Yeah, we got to work hard to do it. Your point is well taken. So, and that's what I'm saying is, industry-wise, we're really good at making things happen fast, and we can get better. We all know that. But by and large, you've got $100 million credit unions competing with your Bank of Americas, and doing a nice job of it. Getting things fast. But to your point, nobody is turning specifically anymore. It depends on the point of sale. When you go to you don't think of applying if you're going to buy a car, people don't apply pre-purchase. They just go down and buy it from the dealer directly. And so how do you compete against this going into the future? What are you going to do? So
I've actually gotten pre-approved for loans, gone into car dealerships, and they say, okay, let's talk financing. We've already agreed on the car. And I said, no, I'm already covered. I got this. Guy said, can I see your offer? Oh, we'll beat that. And they do, because I've given them a stationary target. If you want to make a deal, you can. You know exactly what you have to offer.
And I think that's critical, right? So again, that's competition is a very healthy thing, and it forces us all to be better. So as you and I know, a lot of credit unions focus on indirect auto lending and direct auto lending, and certainly here at Workers, it's been quite a substantial part of our business for a very long time. But if you take a step back and look at which channels generate members and how deep those relationships tend to be, the members who come in through indirect channels, and again, a member is a member is a member, but those who come in through indirect channels tend to have shorter lifespan at the credit union, and not as deep a relationship.
I've heard that from pretty much every credit union I've talked to about indirect lending. None of them says we're really happy with this. I'm not saying they're ready to say, well, we're not going to do it anymore. I didn't say that. But
right.
Nobody has said, boy, we're really glad we're doing this. It's a lifeline.
Right. Well, I think, putting people in cars and getting to work, I don't think that's against our mission. I think that's very important to be competitive in it, particularly, but it gives us an opportunity to open up a relationship and to add value. I mean, the reality, and we all know it, is for many years, branch transactions have been dying. As long as I'm in financial services, 20 years, I've seen it drop, 4 or 5% every single year. Of course, during the pandemic, precipitously. And if we look at our own membership, 75% of our members are rarely interact with us outside of digital channels. And it's kind of interesting, though, who is using, and this was one of the factors in this Back to the Future, which was first we looked, we talked purpose, and then we said, what do we need to do to have a member for life? What are what is the purpose, products and services and advice would we need to keep a member for life? And it was very eye-opening when we took that kind of viewpoint. And from that, we've opened up several new lines of business for the credit union by putting the member first and asking the member what was important throughout their life cycle. So when we talk about the Workers' Way, it's a purpose-driven life cycle value add for members. And again, this then manifests itself into what would be the technology and, very importantly, the people skills needed to add this kind of value. I hope some of the readers or some of your listeners have seen some pictures of the new branches I began to describe, because within those new branches, there's some very new technology, including ITMs. But there's also a hologram called Olivia, who speaks 52 languages, and Pepper, the robot. Now, I'm sure, Robert, every CFO or CEO is tut-tutting at this point and saying, shenanigans and marketing. And there is a huge marketing value in that. But there's a couple of other huge pieces to play here. Number one, it creates or helps create an atmosphere of fun and forward thinking at the credit union, both for members who arrive and for employees. So gamification has become a critical part in attracting and keeping employees in this value economy. People want to make a difference, just like that young man I highlighted. They want to be on the cutting edge of things, and they don't just want to feel it, they want to be doing it. And they want to get involved, and they want to get their hands wet. So here we've worked very, very hard on our culture to accept small fails. We encourage our teams through innovation to fail small and win big. And this has paid us back so many dividends.
That's antithetical to the financial service mindset.
Absolutely. I don't.
And I always cite the example of Jeff Bezos at Amazon. I wish I kept them, but I have so many failed Amazon products that you buy it, and a year or two later they send you an email saying, well, we're discontinuing that. And by the way, here's this other thing we're sending you for free. You'll like it, hopefully. So I'm not mad at Bezos. It's just I'm impressed that they just pull the plug on it and move on and say, here's this better thing, actually.
Well, there's iPhones, right? iPhones with a glass screen, pay $1,000 for the first one and it breaks within 2 weeks. And yet we all went out and bought a second one and didn't blame them. And so, that's been part of the cultural address that we've had here, is really understanding some of the next generations in. and what they're looking for in a workplace. And folks are far more purpose driven than they've been in the past. And then giving them real work that adds value is critical. And this meant a huge sea change, particularly ITMs. By the end of this summer, we won't have the traditional teller role, but we will have video bank tellers. And 2.5 years ago, when we advertised for our first video bank tellers, it was not a skill set that people had. People did not have video tellering skills or Zoom skills.
Right.
And of course, here we are today, Robert, doing this on Zoom. And in the last 2 years, there isn't a credit union in the land who hasn't operated thanks to Zoom or WebEx or Microsoft Teams. So we got a bit of a leg up in embracing the future in a fun and positive way. And then we were able to go ahead and roll out ITMs across our footprint, which now gives us more time to focus in on financial wellness. So within that, we sent all of our frontline folks to train in financial literacy from the National Council of Financial Literacy in DC. So they're all certified educators. This course is not about spreadsheets. It's about the psychology behind money. And it was really beneficial. And the first thing we did was, if we're going to transform lives, we got to start with our own. And we've got to look at our own. So one of the biggest causes in the APA, the American Psychological Survey that comes out every year, is some of the biggest things around that 77% of people. That's the main stress for 77% of people. Arguing with their family about money, but being afraid to open the mail. Actually being afraid to open the mail was huge. And feeling guilty about spending the money. And so in the process that we designed, what we call the Workers' Way, the first survey that members take, it's about how they feel about money and their relationship with it. And it's really opened our eyes, not just to how big this issue is, but how easy it could be for us to solve it and to be there through guiding members to value spends rather than spends that they're not valuing. By connecting them to their bigger dream, it's been really beneficial. And so to put some numbers behind it, when we roll this out in January, about 5% of our branch visits were for a financial wellness appointment. And by last month, July, 25% of our visits were for a financial wellness appointment, with 17% being a follow-up appointment.
Wow.
And so it's really got us running hard here and running well. And I got to tell you, we got full hearts, and our staff feel absolutely awesome about the difference that they're making and the value that they're adding to members' life during this time.
How did you deal with staff transformation? You know, one of the problems with initiatives like this is that you have a group of tellers, and tellers are transaction people.
Absolutely.
I could never be a teller. If you said to me, I'm going to shoot you at the end of the day if the teller drawer doesn't balance, I'd say, just shoot me now. Why wait? My attitude would be, it's $20 short. I'll throw 20 in for my wallet. Good. So we're settled. I'm going home.
Well, I'm sure some of my mentors will listen to this, so I'm not going to lay claim that I was a great teller myself. Not at all. You know, so one of the things how we did this was, if I were to say to you right now, and if people are wondering about the power of psychology, here it comes. If I said to you, Robert, you need to change, are you feeling positive about that verbiage?
No.
No, right? Because we say when we say to somebody you need to change, it's a cliff point. And that's
you need to give up smoking. You need to lose weight. It's all these things, and you need to do them, but you don't want to be reminded of it usually.
So how we did this, or how we cast it, is evolution. And I'm going to misquote Darwin here, but Darwin never talked. He never said the survival of the fittest. He talked about the most agile are the ones who survived, and you got to reach out to your teams, and trust is huge, and your authenticity and your purpose are really critical. So if you know what your purpose is, and your employees are bought into that purpose, these kind of shifts become that little bit easier. But also the piloting is critical in any new initiative. If you roll things out across your organization, you're not going to get the lift that you need, whatever it may be, a new product, a new service. You want to pilot and learn. And again, remember I said to you, small fails. And so you have to set up a process where there are things that even the finest of us will not see or plan for in any new launch. And I'm sure everybody who listens to this will be nodding their head if they're honest with themselves. So you have to set that culture. You get rid of the word change. change is a negative thing. You need to change, Robert. You need to change, Peter. This organization needs to change. That is only for cliff moments. But what we did here is we reached out to our folks and said, you've helped us evolve, and we want to continue that evolution. And here are the next stages, and here's why it's important. But you have a say in this. So one of the things we did with ITMs, for example, which had the potential to be very contentious, particularly around potential job losses and what would have happened in the corporate environment. But remember, at the same time, we're simultaneously training people and putting just about as much investment money into the training of our employees, which helped. We took the 12 most negative change teller force that we could, the 12 who were the most boisterous, and we sent them down to our vendor, and they went down with one mission from me. I want you to tear this apart, and I want you to come back and tell me everything that's wrong with ATMs. And when they went away and came back to me 2 weeks later, they said we should go ahead and do this. Because you have to give, just like I'm saying with our members, you have to give people the opportunity to add value. And if you find yourself at loggerheads with your staff over an issue which you believe as a senior leader is critical, it's probably because it's not just you haven't communicated right. And that's the thing that everyone's, I didn't communicate this right. Perhaps one reason is we didn't allow people into the process anymore. And as leaders, we often realize that change or evolution is a very painful thing. And, trust me, when we get to the other side, we realized very early on that we were going to have to bring in everybody into this process so that we could get the kind of transformational change. Again, we're looking to evolve here, not to change, and that this would be a really different way to go about it. And some of that comes from some of my background, particularly in Japan. I spent 5 years in Japan working and studying and learning how that particular society tackled issues and problems and how they looked at things. And some of it comes from that. And of course, Japanese are group society and look at things as a group. And of course, here we're a little bit more individual. So, we had to find a way that would embrace that and come out at the same kind of result. And that was the first thing we did. Our turnover dropped dramatically during this period. Our employee engagement scores went up into the high 80s, and our NPS score has stayed steady during this unbelievable change. It stayed steady at 87 for the last 3 years.
Now, what's happening with your branch network? Are you shrinking it, expanding it?
No. I go on the opposite and think back to what I told you about gyms. We're very determined to tackle this issue around financial wellness. It's an absolute calling for us. And it's not something we're going to be passive about. So we opened what we call our planet centers, because one of the things that rids people of anxiety is taking part in the planning process, certainly in the example I just gave you with ITMs, at all levels of the organization where this evolution is occurring. So we want our members to plan it. We opened 3 during the pandemic, and the 3 of them have just blown us away with the success. And we didn't market any of them, Robert. We did not. They're not built on. Most of us are thinking, how do we get lots of members into the branch? What can we give away? But we didn't do any of that. This is pure word of mouth and just better placement of branches as well. So for a lot of the listeners, we've seen some transformation in where branches are placed in the last 15 years. We've seen 3-4 shifts. So branches were always on Main Street. Main Street's dead now. Then branches went to either standalone or in supermarket. And we all know that a lot of in-stores, the future there is grim. Standalones are still rather successful, but they're not where people are going. And so we're very deliberate about where we place our new branches. And they're always very close to supermarkets. One of the things we have to acknowledge is members and consumers, their behaviors changed dramatically with the onset of Amazon. But right now, food is still something. Food and alcohol are still 2 staples that people generally have to travel for, and most of the time are quite happy to travel for them. And so we're making sure that our branch placement is very, very close. But if you look at the design, it's radically different from traditionals. There is no teller line, but there are no barriers. And as I said, some of our stories, particularly with Olivia, the hologram. Olivia is very helpful for checking people in, and actually came by the idea flying through Dublin Airport one time, and Boston Logan. Some people may have had that experience, and there were holograms there telling people about bottled water. to remind them to throw their bottled water away before they got to security, because that was one of the biggest reasons for holdups at the security line
Right.
after 9/11. And so I looked at that concept and figured it's amazingly entertaining, because every time it took away your wait time just by looking. But I wanted to interact with the hologram. And so we were able to find a hologram that could do that. One of the things that this hologram does, as I said, it speaks a lot of languages, including American Sign Language. So when we talk about marginalized in the credit union mission, there are huge segments of our population who we haven't done a good enough job embracing and bringing into the financial system. And some members of that community are paramount. So Olivia being a hologram, one of the setbacks is she's on a set screen, on a set cutout. And so Olivia cannot raise her hands above her shoulders because there's nothing to project onto. And in order to make the letter C in American Sign Language, you have to be able to raise your hands above your shoulders. And so we had to design a script with the help of members of that community where Olivia could sign all about workers and what we're doing without using the letter C.
Oh, cool.
That's how cool and how technology can bring marginalized groups together. And we learned so much from that interaction. And we had busloads of folks from different communities come in to see Olivia and help us write that script. And there was this great feeling of having done something important.
Do people still come in to see Olivia just because it's new?
They come in to see Olivia. When you walk into the branch, you can check in. So we use Kronos for appointments. We went to full appointment setting. So one of the other things we didn't know 2 years ago, why were people coming to branches? What was the need for their visits? 50% of the time is for accounts maintenance issues. And, that in itself spurned a huge process to make things easier throughout the credit union, from account opening to account maintenance. So that has given us amazing dividends. But just, again, valuing members' time. I mean, what struck me about life is I have 2 young kids, and, you want to go down and get a haircut, and you throw the kids in the back of the car and you arrive down at the barber's and you walk in and there's 5 people waiting. Now I got to take the 2 guys and put them back in the car with the seatbelts on the seats and then drive off. And that's very frustrating. So, we went with the appointment setting software. Number 1, to take friction out of visits. Number 2, people could preempt and book at a time that suited them. And number 3, to start collecting data on why. So that when members did visit, it was really for value add situations.
Mm-hmm.
That maintenance could be handled from the comfort of their own home or from technology. So we've still a bit to go to deliver on that, but the process is well and truly underway.
Now, tell me about Pepper.
So one of the things I've been fascinated with for most of my life is, 25 years ago, when I was a student in Japan, I could use my cell phone or an ATM to pay bills, send money internationally. I could do a lot. And then when I came back to the West, I discovered I couldn't do any of that.
That's when Docomo.
Right, Docomo, NTT, a lot of huge companies were really thinking about convenience in a manner that perhaps the West hadn't quite gotten there yet. And also one of the fascinations the Japanese have had for a very long time is the use of robotics to take the friction out of manufacturing and to kind of add fun and engagement to things. So, folks ask me, as a futurist, where do I think this robotics program is going at Workers? Do I think we're going to replace employees? And what I'd say to you is absolutely not. If you look at everything we've built, what we're saying is technology takes the friction out of banking, but it's people who transform lives. And we're very big on that. There's been no job losses. In fact, we've added jobs, and we've added better paying jobs with more modern skill sets than what we had in the past. And I'm very proud of that. So the robotics piece becomes this fun element, this engagement, gamification of financial services. So it's in its very early days. What can Pepper do? Pepper can dance. Pepper can joke. Pepper can give some basic information about banking. And the point being here is, one of the inspirational moments I looked at to win over our people was I went back to some of our original board notes. Back at the turn of the century, you're talking about the early 1900s. And there were debates about electricity. Should we get it into the building? There was another debate about when were we going to begin auto lending? These newfangled gadgets called motor cars.
Yeah, there probably was a debate about starting checking. A lot of credit unions did savings and only savings.
Huge debate. You go back and you Google newspapers from that time about electricity. People thought it could kill you. In some cases, it could. But we see that now as that was a slam dunk decision. Oh yeah, get electricity for sure. It caused strife in every single country and culture electricity was rolled out in. It wasn't an easy win, and it was many years before. And even in parts of my own homeland, it was the 50s before certain parts. And the same with the United States. It was the late 40s and 50s before some communities actually had electricity. And I view robotics in a very similar fashion. But again, it's about creating an atmosphere of within the branch visit of engagement and fun and lightheartedness. And from folks, the neuroatypical community, which is substantial and substantially growing. And just for listeners, neuroatypical is largely a huge components from folks on the autism spectrum. They respond much better and have an easier time of de-stressing when they engage with Pepper, because Pepper is non-threatening and very predictable. And so we've seen one of our next steps is inviting school programs in for the kids to help us design Pepper to specifically reach certain communities in a non-threatening manner. So again, learning our lesson from Olivia, we want to carry that into Pepper.
I've talked to Generation Z people, and I've heard from several of them, I don't want to go into a branch because everyone in a branch is judging me.
Yes.
Because I have no money in my account. I've bounced a check or two and everybody's judging me. And I say, probably they're too busy to judge you. But I understand that. So Pepper certainly is non-judgmental. Pepper's not sitting there saying, wow, check bouncer.
Yep. They're not. They're not, you got to keep your passion on in this game, and you've got to look for ways to address this. And you're dead right about Gen Z or any generation. Sometimes the member that comes in the angriest is the one who's being embarrassed the most, often by a credit denial. Because again,
you talk about when you first came to America, you wondered, are they going to throw me out of this branch? Oh, yeah. And in America in the 60s and 70s, a lot of branches had that feel that if you weren't wearing a suit and tie, if you're a man, what are you doing here? Are you a criminal?
Well, precisely. And I could think of one of the last branch experience I had a few short years ago, where I was doing construction on my house, and I had to go and wire some money from a bank account that I had, and I received substandard service because of the way I was dressed, which was in construction clothes.
Wow.
So, certainly I think this young Gen Z person is right. We try not to be judgmental, but, when we tell people, listen, and it happens, as we all know, at least 30% of our members apply for credit are denied. What are we doing after that fact? Think about that number, 30%. I'm sure that's a very consistent number for all of us. If we just focused on that 30% and we didn't add a new member, think of the growth alone in growing members and being vested in a member in a non-judgmental fashion, how transformative that would be.
A lot of it is changing mindset too. Now, your credit union, do you have a growth strategy that involves mergers and acquisitions?
I think that's a huge conversation around the credit industry, credit union industry right now. And having been a reformed banker, it's amazing what happens to these decisions when greed is not a factor. And we see that across banking. One of the main reasons to do it, of course, it's necessarily greed, but it's to make more money. And with credit unions, it's all about the mission, the original founding charter, and that fierce independence that, we're a family, we're together, we're cousins, but we have a lot of fierce independence. But I do think a lot of boards are probably waking up right now and figuring, will we be around 5 years from now? Do we want to join with somebody before the regulator steps in, particularly around the subject of ROA? So, what we have seen is an industry that an ROA sub 45 basis points for 3 years in a row is generally, and the age of the CEO is generally the two biggest indicators for an organization that is looking or needs to probably merge or be acquired.
I know credit unions that have merged simply because a long-serving CEO retired, and no one else wanted the job at the salary they were paying.
Well, sticker shock, I think, is something, exactly. is another issue I think that boards have to tackle. And one of the hard things for a volunteer board is that realizing that if you want to have a world-class organization that can compete, you're going to need the very best in leadership. And that in this job market, you're going to have to pay market rates. But I don't know why you'd surrender a legacy based on that question either. I think, to be honest, not to sound lecturing, that's a little short-sighted. I think that you want that expertise to come in and run with your members to provide all these services that are going to be needed going forward, that are in demand right now and going forward. And you also want to be able to put your hand in your heart to your member and say, we're hiring in the very best to serve you. We're going to do the very best. So I'd say don't cut your nose off if you're a board member and you've got that big decision. Sticker shock is always huge, but look at the mission, look at the purpose.
I also think that there are people out there who want to work in a credit union as opposed to
absolutely. Believe it or not, I think it's a fairly quick discussion for a board to have, and it really is the reason why you exist. What am I looking to do here? Credit unions aren't here to ponder the mystery of existence in that sense, right? Why do we exist? The existential question, but rather from a competitive one and a member service one. I think it's pretty clear, we exist to serve our member. In what way? Is it to provide quick transactions and quick products, or is it to add value, which is what we decided here at Workers? The first two definitely, but also to add that value and to grow our members, and in doing so, grow membership.
And I think sincerely focusing on financial wellness is a wonderful thing for a credit union. Most credit unions talk that.
Yes.
But I don't think they're that sincere about it. I don't think they're willing to put too much energy into it. What they tend to offer is a PFM package.
Exactly.
And they've gotten better over the last 10 years. 10 years ago, they were awful.
Yeah, exactly. Like any investment, Robert, this is one that if you roll up your sleeves and trust in your people and trust in your purpose and mission, you're going to come out the other side a lot stronger. When you know who you are and you know where you exist. Even the big decisions you have to make as an executive team and board become a lot simpler to hone in on what's important. And that's the other thing. These days, there's so much demanded that focusing on the right things at any moment for any organization is critical. But when you know what your purpose is, it becomes a lot easier, to focus in on what you need to in order to achieve that goal.
Before we go, think hard about how you can help support this podcast so we can do more interviews with more thoughtful leaders in the credit union world. What we're trying to figure out here in these podcasts is what's next for credit unions. What can they do to really, really, really make a difference in the financial scene? Can't all be mega banks, can it? It's my hope it won't all be mega banks. It'll always be a place for credit unions. That's what we're discussing here. So figure out how you can help. Get in touch with me. This is rjmcgarvey@gmail.com. Robert McGarvey. Again, that's rjmcgarvey@gmail.com. Get in touch. We'll figure out a way that you can help. We need your support. We want your support. We thank you for your support. The CU 2.0 podcast.